On March 24th, President Donald Trump issued a bold new trade directive. Any country purchasing oil or gas from Venezuela will face a 25% import tax when selling goods to the United States. This new tariff will take effect on April 2nd, adding to existing U.S. trade restrictions. President Trump justified the move by alleging that Venezuela has sent tens of thousands of violent individuals into the United States. The new tariff is not just limited to direct buyers countries purchasing Venezuelan oil through third parties will also be affected. Once a country stops importing Venezuelan oil, the tariff will expire 1 year after their last purchase. China is currently Venezuela's largest oil customer. Just last month, China imported 503,000 barrels per day, both directly and indirectly, accounting for about 55% of Venezuela's total oil exports. Other buyers include India, Spain, Italy, and Cuba. These nations may now face tough decisions on whether to continue purchasing Venezuelan oil or risk U.S. tariffs. David Goldwyn, director of Goldwyn Global Strategies, warns that this move could disrupt Venezuela's oil exports and force the country to slash prices significantly. However, the unintended consequence may be a boost in demand for Russian oil. China and India won't risk extra import taxes when they can simply buy Russian oil instead, Goldwyn explains. The Venezuelan government has strongly condemned the U.S. tariff policy. In a statement released on March 24th, officials called it an illegal and desperate act, claiming it proves that Washington's previous sanctions have failed. Despite this crackdown, the Trump administration has extended Chevron's deadline to withdraw from Venezuela. Earlier this month, the U.S. Treasury gave Chevron 30 days to wind down operations in the country. President Trump argues that Venezuelan President Maduro has not made sufficient efforts to reform elections or accept deported migrants from the U.S. Chevron's new withdrawal deadline is now May 27th. After that, its U.S. Treasury license first, granted in 2022, will be revoked, preventing the company from operating in Venezuela or exporting its oil to the United States. The announcement of the tariff immediately impacted global oil markets. Brent crude prices rose 1.2%, reaching $73 per barrel, while US WTI crude increased to $69.10 per barrel. Will this policy cripple Venezuela's economy, or will it backfire on US trade? Let us know your thoughts in the comments below. Don't forget to like, share, and subscribe for more updates on global economic trends.